Hello everyone, and welcome to Ancient Roman Trading Secrets with General Romulus. That's me, Romulus. This show is brought to you by Backpack Trader. Our goal is to help you become the best version of the backpack trader you can possibly become. Today, let's talk about a Roman trading secret of the ancient variety called gap trading. You may have heard of this. No, it's not the place you buy your jeans. No, it's also not that attractive little configuration between your teeth. Nope, gap trading. So today, Walmart had earnings that came out earlier this morning. The stock gapped up. Here it is, up over 5% for the day. And you see that big open window, the difference between yesterday's trading and closing and where it's trading right now. That, everybody, is called a gap. Okay, there was one here to the downside, followed quickly by another one to the downside. Here was another one to the downside back in late July, just a few weeks ago. And now there is one to the upside. Okay, gaps are frequently created and caused by news-related events. They're not often, sometimes, but not often, just out of the blue. Okay, last night after the market closed, Walmart released this morning before the market opened, Walmart released their earnings. Apparently, it was something that traders and investors liked. And as the market makers were preparing their orders, they realized that in order to satisfy the balance, they needed to bring the stock up an awful lot higher than where it closed yesterday. Hence, the gap. There is some misunderstanding in the trading universe regarding gaps, whether it's Walmart or any other type of stock out there. Let's go over a couple of those first. Urban myth, all gaps are closed. All gaps are closed. So this gap right here, you see it trades down, then the stock goes back up to the upper area of the gap down, then fades again, but eventually the gap is closed over here, okay? This one gets filled pretty quickly, but not all gaps get closed. And sometimes, even if they do get closed, it takes months, and there could be even years before they get closed. So that's definitely something to be aware of when you're looking for these types of trades. Number two, just because something gaps doesn't mean that the trade ought to be jumped on in one direction or another automatically or willy/nilly. There are other parameters and ideas and trading strategies and concepts that should be followed if you want to increase and improve your probabilities of success. Because remember out there, it definitely is about being consistent. Okay, so we see the gap over here in Walmart. First of all, it is trading just above its 200-day moving average as we speak, although that may not mean a whole lot down the road. However, the stock did gap up today. Now, it's not quite past 10 o'clock in the morning, so the stocks have been trading for roughly 35 minutes or so. Here's one way to trade something like this. Okay, get in close to it. All right, zoom in quite a bit here, and just look at today's trading action. It opened at 138.90, right there, 138.90. The low is 138.19, and that's in the first 35, 36 minutes of trading. After the first hour comes and goes, if at any point for the rest of today, this is an intraday trading idea only. This is not to be carried overnight. If the stock trades below 138.19, probabilities increase that the stock will then continue somewhat lower. Again, doesn't have to close the gap. As a matter of fact, there's a very low probability that Walmart will close that gap at any point today or at any point in the very, very near future, over coming days, let's say. Weeks or months, different story, but coming days, it may not close that gap. Again, though, watch the first hour. No trading goes on. After the first hour, if it trades below the low of that first 60 minutes of trading, which in this case is 138.19, the probabilities increase that the stock will then continue somewhat lower. So a trade could be made, shorting or buying puts, other strategies of that nature, in order to profit if Walmart trades below 138.19 and then does continue lower. Okay, Home Depot also had earnings today. That stock that didn't gap, it just kind of moved higher and it's continuing to go higher. Yeah, the earnings were out this morning. Another couple of retailers. Target looks like that's tomorrow. Costco looks like that's in a day or two. I think Thursday. That might be coming out tomorrow or Thursday. And the stock, a little bit of a gap in here above this trading range. And that's in sympathy for the Walmart trade, the Wmt Gap that's going on, and the Home Depot gap that's going on right now. Other than some quicker gap style trades, hopefully you found that interesting and helpful. If you want to learn more about those types of things, just put it in a comment below. And one more thing before I get into something that I know will be of interest to traders and investors out there. My partner Troy and I, this coming Saturday, August 20th at 11 a.m., we are hosting a live 4-hour session. To sign up, the link is right here. I'll pin that in the bottom there. All you have to do is click on it. We are going to be teaching and training about the value and importance of having organized money management skills, a trade plan. We call this the Trade Plan Hacking Live event. You'd be amazed just getting a trade plan together. You can have excellent trading strategies and tactics and ideas, analysis, but without the right trade plan, you're going to wonder where your profits are. If you just put a little discipline onto that, you'd be amazed how much better your results can become. So again, join us. That's this Saturday, August 20th at 11 a.m. It's going to be a 4-hour event. For those who wish to watch it again later, all participants will receive a recording of that event. So click the link right there below, join us, and I tell you, it will be well worth your time. Putting a little discipline and a trade plan together, you'll be amazed at how much better your trading and investing results will become. Okay, so S&P 500 still moving in its rally phase from that June 17th low. There has been some good developments, some bullish developments rather, that have occurred. There are some major indexes that are messing around with the 200-day moving averages right now, the Dow Jones and the Russell 2000 being two of them. The industrial sector in here has been above the 200-day moving average for a couple of days. S&P 500 just kind of stalling out at it. These are bullish developments. On the bear side of the equation, there are now some bearish negative divergences that have appeared in some of these higher moving averages and the indexes. And in addition to that, there is a major volume problem going on as well. Major volume problem going on in the market. As a matter of fact, yesterday was the second lowest volume day of all of 2022. Second lowest volume day of the year. Yes, I know it's summertime, but why couldn't volume even get above Friday? Friday's in August supposed to be the lowest of the week, and yet yesterday couldn't get above there. Matter of fact, it was a little bit lower, and the market was up. That's an odd thing. Okay, that's a very odd thing. A lot of other oddities occurring right now. Most of them, again, with demonstrating through the lack of volume. It shows a lack of commitment, a lack of interest from the larger institutional players. Again, very odd situation with that respect. Okay, so we have the markets overbought on a short-term basis, starting to demonstrate bearish, slight short-term bearish divergences with the higher prices. Volume really dangerously low for a continuation of the upside. However, the price action has been bullish, and again, coming into contact with 200-day moving averages, which is also intermediate, longer-term bullish developments. All right, this has been your old buddy Romulus with Backpack Trader. Don't forget, please join us Saturday, August 20th at 11 a.m. Reserve your seat. Click the link below. Can't wait to see you there. That's all for now.